Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Today's show is brought to you by PrepareWise. Rough weather's ahead, so it's time to prepare. Your leading source for emergency preparedness food. Go to preparewise.com and always use the code Lutz to get free shipping and a whole lot more. You are listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1230 WBZT. Well, the taper, it was supposed to be here already, but the only taper is the taper of the talk of the taper. And with us now is Danielle Park to talk a little bit more about this taper, or the taper caper. Danielle, how are you?
I'm good. I'm glad you could find some humor in it.
Yeah, well, they got to do something at some point, or these fiat currencies are all going to collapse pretty much like a row of dominoes, right?
Well, yeah, I guess in the final end game of that, if it goes right to the wall, the main themes in the economy have been the post-credit bubble shock and what that means to demand in the world. And so, I've certainly been one of the people saying there's a lot of deflationary weight to what's going on in the deleveraging cycle. And the fact that people have less savings, the fact that they are now getting less income from that savings thanks to 100-year low in interest rates, the fact that the work participation rate is so low. So there's a lot of things that are just suppressing any kind of inflationary forces in the real economy. So on the other hand, on the other side of that, you have the Fed trying to offset that, they would say, with a certain amount of financial stimulus. But I put on that clip yesterday on my blog from How the Economic Machine Works. I thought it was really well done. It really goes to show those countervailing forces and what they're trying to do in terms of, allowing a deleveraging cycle to play out without having the economy go into a complete depression with all of the sort of downward spiral of what can potentially come out of that. So, on the one hand, you may argue that they are trying to do something to offset the weight of the deleveraging. On the other hand, the mechanism they've chosen, the way in which they're trying to stimulate this real economy through just financial appreciation in certain asset classes, it seems to me to be just such a counter-intuitive and destructive force, because you really are creating great distortions. You're putting, the credibility and the viability of a benchmark currency out in the wind. You're putting a lot of mayhem into different asset classes. You're putting a lot of people at financial risk, and you're forcing people who really can't afford to lose any money. The rhetoric of the time is that they have no choice but to go into risky assets. Well, they do have a choice, and I would say that their choice is to either admit their facts right now and say, I don't have enough savings, therefore I need to go back to work, or I need to augment this savings pool somehow, maybe by lowering my expenses, or, I don't know, moving in with someone, doing anything you can to kind of make your bottom line stretch. Because you can either do that now and live within the reality of the math you have, or you can pretend and extend along with overvalued asset markets a bit longer, but at the end of the day, when price discovery hits, you're just going to be back in worse shape than you are if you would just acknowledge it today and not take that excessive risk with your savings. So it's a real conundrum.
That it is. And, I was at a conference up in Orlando outside of Disney this weekend, and one of the speakers there was a room of about 300 people, and he said, and these were bright people there, and he asked the question, how many of you people believe that we're in an economic recovery right now? How many people you think raised their hands, Danielle?
Not too many.
How about 3? And those 3 people, I don't know what substances they were abusing, but I wanted to ask them where I could get some.
Or maybe they were in a a very high-end retailer that had found a few customers that wanted to spend on their products.
Yeah,
there
mostly.
are certain segments, I think, where they still have people wealthy enough to buy their products.
Yeah, I think they were mostly like Chinese, rich Chinese here to buy or something. I don't know what their deal was, but they were obviously quite delusional and had no idea what was going on.
Well, the other thing I think is that we all have this choice to make, because on the one hand, I agree with that the recovery has been really weak, and the data that we can measure suggests there's not, there's no velocity of prosperity through the real economy from the stimulative efforts of the central bankers. And so you've got undersaved, underemployed population that is aging rapidly, living longer thanks to drugs, and really has a gap in their balance sheet that they are having a hard time filling. So on the one hand, that's the reality. On the other hand, you have financial markets that are back at cycle highs, the same highs that they were, let's not forget, Kerry, at the peak of the credit bubble in 2007. So you have the S&P now slightly above where it was on the back of the credit and housing bubble. So back then, at least, you could have said there was a legitimate, demand story moving through the real economy. Global demand was more than 5% a year at that point. Global growth was about 5% a year at that point. Today, it's like 2.5 maybe. And you have those asset prices back at the peak level. So some people would say, well, don't worry about the real economy. It doesn't matter what the fundamentals are. Just go along with the ride because the Fed's in charge. And I wish I could believe that. Unfortunately, that belief system has proven to be suicidal in every other cycle in market history. It works for a while the belief, decouples from reality and says that none of that stuff that matters anymore. But in the end, that stuff always matters. It always comes back to, you've heard the saying, it is the economy, stupid. It does come back to that. And so if your strategy is to surf the wave and not worry, dude, the problem is who's going to pick you up? Who's going to fill your bucket once you've blown up again? And the answer, I'll tell you, Kerry, is nobody. Nobody. Certainly not the central bankers, and certainly not, the government is already doling out more than it can afford in terms of social benefits. So there won't be any great force to catch you when you fall. And I think that's probably the biggest thing that individuals today need to understand. It's just back to, the whole living on drugs as opposed to living on a healthful body. People can make a choice. They can decide to lean heavily on artificial stuff, but at the end of the day, it doesn't really serve them, and it doesn't really make their life any better, and it probably makes it much worse in the end.
Yeah, you're so right. And the well will eventually run dry, and failure to understand that now is going to lead to real tragedy later on down the road when they go, and it's like that old movie Oliver where Fagin is feeding all the wayward boys, and Oliver goes up and says, I want more, and they're going to go back and you're going to say, I want more, and they're going to say, no, there is no more, and then what are you going to do?
Mm-hmm. Yeah, it's a tough time for realists at the moment, I'm afraid. They really are, trying to fight to keep your sanity in the midst of madness, and you really do have to sit down and discern what it is that you're about, what it is that you stand for, what you believe in, what is objective facts that you think you can reasonably measure to build your belief system on, because otherwise you can be inundated and tossed about with noise and pollution from all over the place. And again, none of those places are particularly accountable to you in the end. You fall or not on your own decisions at the end of the day. And I think that that's the thing people have to try and keep in mind, as much as they want to be perhaps swept along with the jubilant, forces, people who are assuring them that this can work, that more debt will fix more debt. There's just no evidence of that long term. So it's a tricky time.
Yeah, it is certainly that. And like what usually happens, most people do exactly the opposite of what you should be doing in times such as these, right?
Yeah, so what I like to talk about, because you can get extremely dark, and I don't find that particularly productive.
No.
So what I like to talk about is the things that I think are useful, that I know have served people over various other periods in history. It goes back to personal discipline, personal habits, how you raise your family, what you do in your own household, how you feed yourself, what you do for a living, whether you're practical in terms of what you plan on in terms of spending, how much risk you expose yourself to. We aren't all hopelessly tethered to the crazy people. We don't have to just go with the madness of crowds. You don't have to, for example, pour all your life savings into stock markets that are decoupled from the real world just because that's what so-and-so says that you should do. You can actually try and pull back and think about what makes sense and what's stable. And the other thing is, and I'm doing a podcast for my blog today on this, another key way, other than insider trading, which is certainly what tons of people are doing in this market. There was another story today about how a bunch of people in Chicago got the news of the no taper last week, earlier than everybody else. Every major report that's coming out, we're getting news, because Nanax can track the trading volumes and saying, hey, how come these guys were buying or selling, seconds before the news hit? Well, the answer is because some people are getting headlines in advance of others. It's supposed to be improper and illegal, but it's happening in mass at the moment. You also have a bunch of people doing insider trading right now. So you can say, well, I'm just going to do that. Well, you can, but it's also imprisonable offense, right? So you do so at your peril to your liberty, potentially, and if you're not interested in that, then you're kind of back to, you either participate in the madness, buy stuff at all-time highs, or hold stuff here when it's held up by ether, or you just pull back and wait for when reality will reconnect. And I believe it will. If you don't believe it will, then I guess you govern yourself accordingly. But there's never been a time when reality has been defied indefinitely, and I just think this won't be one of them either. And once that investment gap closes between real demand, what's really going on, and how many customers can actually buy things versus the forecasts of the euphoric masses, once that gap closes, then we're going to get an opportunity again, which will be wonderful, exciting, and rewarding. And so it should be, because if investing was easy, every person in the world would be very wealthy. If doing it wisely takes a lot of self-discipline and restraint and some actual rule set, then the people that have that still have a decent shot of winning the day here. And that's an optimistic thought.
I think you make a great point. I want to talk more about this up next on the FinancialSurvivalNetwork.com. I'm Kerry Lutz. We're here with Danielle Park, 1230 WBZT.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you.
We're back. FinancialSurvivalNetwork.com. Kerry Lutz speaking with Danielle Park on 1230 WBZT. So, Danielle, you make the point that it's hard to be optimistic at times, but this is a cycle like other cycles, and we're going to get through it, right?
Yeah, I think so. And I mean, you can, I always say every generation tends to be navel-gazing and a bit myopic about their own experience and think that they have it worse than anybody that ever lived. And I think, thousands of human history would just suggest that you're wrong, that it's been really bad before, and that it'll probably correct some of this mess. There'll be new issues in the future, but we can expect that this present state of disconnect and hope in magic from central bankers won't last forever. And I look forward to that time because, as I say, I think you can prepare and be ready and not necessarily victimized by it.
Yeah, and in fact, these recessions, these depressions, really play a healthy function because they wring out the excesses, or that was their function until central banks started to intervene, right?
Well, exactly, and not to wear out the health analogy, but it always is so crystal clear to me. To what extent is it helpful to constantly give artificial assistance to someone to make them lean over on something instead of walk straight on their own? And that's what happens is that you basically make the host less healthy, less strong when you constantly give it crutches. So that's what they've done to the economy, and not surprisingly, it's very weak. That's what they did to households in the credit bubble. They threw everybody under the bus of sell anyone you can more loans, and who cares whether anyone can pay it back. We're all gouging out profits of the masses and all that. So they really hollowed out the real working people in the economy, and so now we're all paying the price of that. So once the clean out comes, and it's been deferred repeatedly because of the powers that be, the status quo, people not wanting to take their lumps. But once the final clean out comes, you end up with a much more robust, honest system. And that's why capitalism eventually over time always self-corrects and reinvigorates and comes back stronger. But first of all, you have to allow the creative destruction forces to take place, and that's what's been held up. That's what we've been trying to have that happen for the last few years, and every time it begins, someone tries to intervene with another artificial stimulant, and that's just really run its course. And look at the other thing. Even though the Fed taper nonsense, when you had the front lining of the headlines last week, they said no taper, stocks went up the Dow went up 140 points, and everything seemed to be all off to the races. It's all been given back again since then, Kerry. So this is why I believe that we're very likely at the end of that belief phase, where no matter what they come up with now, people will already know that gig is up. That's already been tried. That's the same old, same old. And as a result, people go back to looking at, what is under this tablecloth, what really is holding up this table. And that's where, the fundamental problems become more relevant.
And you think that people really are wising up, that they know they've just been scammed all this time, and now they're figuring out that the wizard behind the curtain really has no clothes?
I think a lot of people have known that all along. I think that's one of the reasons you see participation rates so low in capital markets. What was really interesting to me was we've been talking about the lack of volume and lack of buyers and green days when market prices move up, and how the crescendo always comes in the down periods. And we've seen that in the last week since the taper off euphoria happened to prices. There was very few participants. And then since then, on the down days or the selling days, you've had a big surge of participants. So I think a lot of people know this gig is up. A lot of people haven't participated at all and have been patiently waiting for truth to prevail. And then others have been gaming it the way they always do. Lots of leverage. And, I saw the head of BlackRock today on some business show this morning, and, the question was put to him, biggest ETF and managed money product guy basically in the world. And they're asking him, so 5 years into a bull cycle, stocks at all-time highs, where are they going to be next year? Will they be higher? And he said, oh, yeah, I think so. I mean, absolutely. I think, but, a guy like that will never say that they won't be higher. A guy like that will never say we'll have to give back some of these outsized, outlandish returns that have happened on the QE stuff the last couple of years. They'll never say that. And so they're basically, you have to discount everything that comes out of their mouth.
Are you telling me that you don't believe what he's telling you? Are you trying to tell me that he's talking his own book?
Well, absolutely. I mean, I write about that all the time. Even Warren Buffett, Kerry, I don't know if you caught him last week talking about how this is, how the Bernanke is genius and that Yellen is wonderful and the Fed's a remarkable institution generating revenue for the U.S. government and all this. Because you know what? Because Mr. Buffett now owns a long always equity fund. Luckily, he has tons of billions of dollars of his own that's already been taken, out, and he's got more than he needs personally. But he now is in the business of making public assets levitate if he can, and he comments to that effect repeatedly. And his Berkshire shares they're a mirror image of the S&P. So they tanked in 2000, they tanked in 2008, they lost half their value with the S&P. They've recovered with the S&P over the last few years. And do you think he wants that magic potion to be whipped out again? No, because then he'll go back to being, considered not a great money manager, and he loves to ride the wave of he's, the smartest that ever lived. So it's a pretty disappointing thing, but you see that people have their chips already down, and their business model really dictates whether they admit facts or not.
Yeah, well, he loves to see the markets go down because then he gets to go, he always has cash, and then he gets to go buy up assets at a substantial discount, right? Isn't that what he's about?
Well, that's what he says, but I got to tell you something. For anyone holding on to Berkshire shares, nobody loves it when they go down by half. Most of the people that already have the bulk of their net worth in that are not happy campers when they go through massive bear markets and lose a ton of the value. So he can say that it's a wonderful buying opportunity, but unless people were selling before that, then it really doesn't do them much good.
Yeah. Yeah, well, he's talking his book as well, right?
Yeah.
So you got to take everything that everyone says with a grain is what it comes down to, because, how many people are really speaking the truth? I mean, yeah, we're living in the most perfect of all worlds, this Panglossian view of what's really going on in the world. And what's really going on is a lot of people are getting screwed and they don't even know it.
Yeah, well, time to wake up. They can always come to their consciousness, get out the smelling salts, and welcome back to the real world. There's lots of things going on that are real, and people can find them if they want.
Yeah, wake up and smell the coffee, as it were, right? Because, I mean, reality is there, whether you want to face it or not. It's still reality. So you need to wake up and really see what's going on, because there's still time to save yourself, I think is what you're saying, right?
Well, I just think it's always been this way. I think the only thing that's different today is that there's more media, more internet, more, more video, more everything that hits our subconscious as well as our conscious, and just inundates us with information that can, either shape the way we think, and no doubt does on some level with all of us. But I think you have to try and find the intellectual strength to fight back and still define your own terms, define your own life, and control your own risk parameters. And I think that, when people are able to do that, then, it's like with teenagers. They can hang out with the wrong crowd, but as long as they have a good moral compass in themselves, they're not necessarily taken off track. And I don't think that we have to necessarily do self-destructive things just because there's a status quo that wants us to. We can still control our own responses.
I think that's important, that you realize that you can do something. You don't have to just be swept along in the propaganda, in the hype, and just go along with it and get wiped out effectively. So the website, of course, is jugglingdynamite.com. We go to it. You should too. And go to financialsurvivalnetwork.com. And, of course, we'll be talking with Danielle in a couple of weeks. And, yeah, it's always darkest before the light, as the book says, as the book title goes. And, Danielle, you have a good one. Stay healthy. We're trying to. And stay away from those mega-calorie treats. You have a great article on the blog that China, while they're taking everybody's money, they're also becoming world home to most of the world's diabetics.
Yeah, it's a pretty shocking stat when you consider they have a third of the world's diabetics now and only 14% of the population. Something's going in the wrong direction there for sure.
Yeah, I think they need to be watching that movie, Fat, Sick, and Nearly Dead.
Everybody needs to watch that. And I don't even get any money for saying that, Kerry.
I know, neither do I, but I've gotten a lot of people to watch it, and I think it's part of the global consciousness awakening. So anyway, Danielle, talk to you in a couple of weeks. You be well.
My pleasure. Thanks, Kerry. Bye.
Bye.
This show was brought to you by PrepareWise. They're the leading producer of certified GMO-free, chemical-free, organic emergency preparedness food. I buy all my emergency preparedness food there, and you should too. I like the 183-serving mega sample pack. It's an amazing value. It's $280. That's less than $2 per meal. Go to preparewise.com. That's preparewise.com and use the code LUTZ, LUTZ, to get free shipping and much more.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.